Let's talk about the tensions globally itself, the tensions which are escalating between Israel and Iran. An Iranian official told Reuters that there was no missile attack on Iran. Explosion was heard in Isfahan, which was a result of activation of Iran's air defense system. To discuss this and more, we have independent defense expert Maroof Raza and also Jonathan Schiessl, Deputy Chief Investment Officer at Westminster Asset Management with us. First, we'll ask Maroof, what exactly is currently underway? Where do you think it goes from here? What the next step could be from either of the sides?
See, both sides are under pressure to show that they can deliver to the expectations of their people. And Israel is certainly not willing to take a moderate and more balanced approach to everything, because considering the fact that, yes, the attacks came to Israel from Gaza and they've done sufficient damage there. I'm told thousands have been killed and pictures show that buildings have been completely demolished. But Mr. Netanyahu sees himself as a war prime minister. And Mr. Netanyahu sees this as a kind of revival of his political fortunes, because he was in the dumps as far as the Israeli political situation went just before the attack took place from Gaza. Now, as far as the missile thing is concerned, you know, in military terms, we call it, checking the response mechanism of the other side. These could be fake attacks. These could be fake movement into Iran's airspace. So those things being what they are, I don't think Mr. Netanyahu is going to go the whole hog now, because there's too much pressure on him internationally. And if he does, then he has to be held responsible for the complete economic mayhem that will come about in the Gulf region, because Iran is not going to stop short of blocking the Hormuz Strait. Iran is not going to stop short of attacking various vulnerable points in Israel. Israel has just shown that despite its much trumpeted security infrastructure, it was very vulnerable to a Hezbollah attack. So there are issues that we need to understand. Everyone's going to be pushing.
Right.
There's going to be a war lobby that will push for conflict situations because they can sell arms. There's going to be an oil lobby that will push for tensions because the premium on a tense situation on oil will go up by 20-30%. And there will be a lobby of countries making roundabout statements about talking about peace and negotiations. But about time they get onto the table or they get onto the battlefield.
All right, table or battlefield, there are so many lobbies. Let's speak about whether we can afford a war right now or not in just a bit. But until then, let's speak about the investment lobby. Jonathan, the street was just about coming to terms with normalization in, the West Asian region, and things have flared up once again. Everyone was focusing on all the other macros, which included the likes of economic recovery, maybe at some point reducing interest rates towards the end of this year, if not 3, at least 2, if not 2, at least 1, and then talking about all the elections, etc. What does the investment lobby do in a situation like this?
Well, I think as you've pointed out earlier, one thing it isn't doing it just at the moment is panicking. The early moves in the markets were a sort of initial reaction to the news of what was happening. But clearly some sort of calm work, a little bit of calmness has been restored, and India in particular is obviously performing relatively well to other markets. I think, to put it simply, from an investment perspective, the one factor, if you like, that investors don't like is uncertainty. And clearly we still have dollops of uncertainty ahead. Nobody quite knows what is going on. And clearly, it's very difficult to predict where this will lead to and what will happen. So I think uncertainty coupled with rising oil prices coupled with inflation that's not shifting down, the market was already in a mood to sell off a little bit after a very strong quarter. So probably the geopolitical tensions are just adding to an already slightly jittery sense that we had already.
So what would your call then on the market be? And you said that markets don't like uncertainty. You said there's still been some calm. Is this a calm before the storm, or is it a calm of recovery that, okay, maybe things may not escalate as much?
Yeah, I think you're right. I think the interesting market to look at will be some of the government bond markets. Usually in times where you see extreme geopolitical tensions, investors head straight for the government bond markets for the perceived safety of government bonds. We saw a little bit of a movement, say, in the US 10-year yields earlier on this morning, but that's already calmed down as well. So, we haven't really, considering what is going on in the Middle East, seen any tick up in government bond yields. They've all been heading higher, which is, as you discussed previously, more down to rising inflation and the clouded outlook for interest rates. So we haven't really seen a big move in the markets just yet, but obviously that could happen if the situation continues to escalate.
Maroof, just wanted your thoughts that if in case there is an escalation that does take place between Israel and Iran, do you think that it would be long drawn, something that we've seen with Russia, Ukraine, and now we're probably seeing the same thing take place with Israel and Gaza?
Question. But the point is that, when you fight low-intensity battles like Israel is fighting in Gaza, those can go on forever. I had said from day one that it's going to be a long drawn-out battle for attrition in Gaza, and Israel's not going to have a cakewalk, whatever its high-tech armory Israel may boast of. As far as Ukraine is concerned, I think Mr. Putin's team is completely clueless about what their aim is. And I had said at the start of the Ukraine invasion that Mr. Putin would do well to take parts of eastern Ukraine and then call for a truce and then go and negotiate with a position of strength. Here, there are two possibilities. One is it could be a short, sharp shootout, tit for tat kind of thing. You hit me, I hit you, and I've shown that, I'm not going to take it lying down. Or if Iran responds, and which it probably will, with everything it has, and Iran is not exactly militarily a pushover, then the situation could escalate to other countries in the Gulf region, and more importantly, hit the oil markets. Because if it's unstable there, then obviously we all know that the prices of oil go up from $90 a barrel to 120, 130, and the oil investors make a killing with it. But long and short of it is not going to give Israel any conclusive results, except for Mr. Netanyahu, who will probably be thumping his chest and saying, you hit me, I hit you back. But can he count for the 3,000 lives that he took in Gaza? Can he count for the lives that this future conflict will cost? As far as India is concerned, India is going to wait and watch, because India has got ties with both Israel and Iran. But I personally believe that with China and Russia backing Iran, and the United States, they making promises but not having the guts to actually twist Mr. Netanyahu's arm to say, okay, calm down. The situation is going to linger on for many months.
Okay. Jonathan, let's wrap up this conversation with your position on other asset classes outside of equities, given this uncertain environment. For example, we have metals which are rising as well. And on the other hand, we have gold, which is at a record high. Do you have a lot of investors asking you about allocating money to different asset classes? If so, what are you recommending?
Absolutely. Yeah, look, I think clearly we're in a phase, and obviously, if oil prices do move higher, inflation clearly is an issue that's certainly coming back to haunt some of the major markets. And therefore, from our perspective, we think oil stocks or oil is probably the best inflation and geopolitical hedge you've got at the moment. So we are quite invested in that part of the market. We do have and have had for some time good positions in gold as well, and that's obviously been an interesting area to be more recently. But you're quite right. Obviously, the data that had been coming out was showing, very strong or reasonably strong global growth. Better data coming out of the US. Obviously, China's slowly recovering, and therefore the commodity markets do look very interesting. We have some good exposure to the broader commodity complex as well. And I just probably finally finish on the fact that if we do see yields in bond markets coming off a little bit, that's probably a good time to sell because we're quite bearish on the bond prices as well.
Just a follow up to that, Jonathan, before we let you all go, crypto, where does that fall in the scheme of things? Because now there will be people saying that, okay, let the governments go to war, let bond yields rise, let's focus on an asset class which has nothing to do with the government. Do you think that makes a case?
Well, I think it's been very interesting, hasn't it? I mean, crypto is the ultimate momentum trade, but you've seen crypto coming off as geopolitical tensions have risen, and there were plenty out there who were saying it's the new gold. So I don't know, it's not particularly behaving as an anti-fragile asset as such at the moment. Now, obviously, there's complications with the halving of the Bitcoin and all this other stuff going on at the moment. But ultimately, to us, it's not an asset class we look at. It seems to be more of a momentum trade than anything else. And clearly at the moment, it's suffering a little bit from that momentum.
All right, gentlemen. Well, we're going to leave it on that note. I'm sure it's a conversation we'll probably revisit soon enough. But thank you very much for joining it, Maroof, as well as Jonathan, this morning. Well, we need to take a short break. But